Guys, what's going on? My name is Ryan. I like to trade ETFs and I like to do some technical analysis and put it into a video for you guys each week. So today we've got natural gas represented by ticker NatGas USD. I know there's a couple indexes out there, so we might be off by a couple pennies, but let's just dive right into it. So we're here on the daily, and I'm seeing some very, very interesting stuff taking place here in natural gas. First thing I wanted to note is I like to look at everything basically, but one of the lesser, or I don't want to say lesser, but one of the less common things I use is fractals, and fractals is basically taking a historic price action and applying it to current patterns in your trading. One of my favorite quotes about the market is that the market never repeats itself, but it rhymes, and I just like taking that quote into consideration whenever doing fractal trading, because it's definitely not a science. It kind of falls into the more art category. But what I see here is a very familiar pattern almost 4 years ago, and that's when we have this, head and shoulders, inverse head and shoulders bottom here. We come up in this particular spot here that I have bubbled is the point that I'm talking about, and it's interesting how close and it's starting to mirror what happened over here in 2013. Not so much on the left side, I have to admit, though there are still similarities, but definitely on the head and the right side. So on the left side, the similarities that I see is essentially the inverse of what's happening here today. Here we have this high and then a higher high. Here we had a high and then a lower high. If we were to flip this around, it would look very familiar to this. But either way, we came down, we had our V bottom, we ran way up here, and then we basically, kind of same thing over here, but we have a high and then a lower high. Over here, we have a high and a higher high. Still fairly similar, but then we have this massive drop downwards. And then the most familiar thing about this chart so far is what happened here on the right side. Is we came up, we had this dip, and then we had our first high. Right here, we came up, we had this dip, first high, dropped down, then we rose back up and made a basically parallel high. You could say that happened over here, and then we came way down below the center point. So if this is the center point, we came down way below it right here. So this is very interesting to me, and be interested to see if this plays out at all. But as far as fractal trading goes, it's one thing to do that with stocks, but it's another thing to do that with a commodity that goes through cycles and whatnot. And I see something that's kind of undeniably similar here in this instance. And we can see that the resulting action from this is basically it's the middle point in the ultimate move upwards. So if this is our ultimate bottom and this is the middle point, then we could expect a fairly similar move. Moving away from that, I wanted to get into what I'm seeing, some patterns here, and let's first go ahead and talk about the divergences. So this is going back a little ways. And the major divergence that I'm seeing here is our CCI is continually setting lower lows, while our price is making higher lows each time. This has happened 3 times now. And as far as an indicator or oscillator goes, 3 times is about the max that I've ever seen. Here on the daily, we also see our RSI has been slowly moving upwards, while our price has been slowly moving downwards. This is a regular bullish divergence here. And we see the same thing playing out here with our CCI making our low here and then a higher low, while price makes a low and a lower low. It's a regular bullish divergence right there. And then as far as the pattern that I'm seeing a diamond, but we get to that on a lower time frame. For this purpose, this looks a lot like a symmetrical triangle to me. One where we come up and we have our A, B, C, D. And I think that if this is a legitimate symmetrical triangle, this might have been our E, and we should expect higher prices from here. We should expect higher prices is because we are in an uptrend at this point. We're no longer in a downtrend. If we were in a downtrend and we came into this pattern, you could say that this is bearish, but since 2016 when we bottomed, about a year and a half ago, we've been moving upwards. And I should take a moment to state that I do have a bullish bias here on natural gas, and if you're a bear on natural gas, that's perfectly fine. I welcome criticism. Don't just turn off the stream. I think all opinions are legitimate, and if you are bearish, I think that you should stick to your guns and try and debate me a little bit in the comment section. But from the daily, let's go to the 2-hour and see what we have on the 2-hour chart. So on the 2-hour chart, I've been looking at this descending wedge for quite a long time, and I think that we are finally starting to break out of it, but there's a new pattern that's taking place, which has got me very concerned for natural gas. So as far as the previous wedge pattern goes, you can see that we kind of came all the way across this here. And the only interesting thing about this pattern is that once we broke out of it, we broke out of this range that we've been within since May here. We broke out, but we came back down to retest this level. We fell back into the trend, and then we moved out higher. And that's very typical for almost all patterns, is that once you have a breakout, you will retest that previous resistance. That previous resistance becomes support then, and you move up higher. It's the end of a trend, basically. So what's got me very concerned at this point is the diamond bottom that I'm seeing us play out in. I'm worried because trend is moving downwards. So 9 out of 10 times a diamond will be a continuation pattern. And that one other time is, your Elon Musk. He'll call the bottom of Macy's, and it'll be a diamond bottom and explode up higher for years to come. I'm not calling a diamond bottom here. I'm calling just a diamond. So basically, you see that we have this resistance line here on the left, and I was really hoping that we were going to come up and touch this line, flag out, and move higher. We didn't do that. We made a lower high, and this is the start of what I believe might very well be a diamond bottom, or a diamond continuation. So as far as the touches go, an even number of touches represents a continuation, and an odd number of touches between our support and resistance line represents a reversal. So let's just point them out here. So we come down, we have 1, 2, 3, 4, 5, 6, 7, 8, and so we're at 8 right now. Now I don't think that 8 is going to be the total number of touches that we get from this pattern. Over here on the left side, we can see that we touched it numerous times on our way. And over here, I kind of expect the exact same thing, but we will keep this tally. We are at 8 right now. We could see 9, 10, 11, 12, and then we'll break down. But this has basically been a swing trader's paradise for the better part of the last 2 months with all of these. We're in a sideways range. You take a trade in UGAS, you ride it up. You take a trade in DGAS, ride it down. UGAS up, it basically goes up 15% in 2 days, down 20% in 2 days. Up 20% in a week there. Basically, it's been a swing trader, day trader paradise here for natural gas. And I'll most definitely be trading this bearishly on our way down to our next support level down here. The reason that I'm calling it a potential diamond bottom is that as far as our higher time frame goes, we are on this hard support trend line moving upwards right here. We came from D, and we came and touched E now. We're just moving sideways. Now E is the completion of any pattern: ascending triangle, symmetrical triangle, descending triangle. They all have 5 waves in between them. And we just hit E, and we can expect a move either to the upside or to the downside. Descending triangles and ascending triangles usually get a very good indication of the direction that price should break out in. For symmetrical triangles, they're symmetrical because there's basically no clear direction. It's just coming to a point where it has to make a decision, has to break out of one of these. It might bust to the upside, break down, and move to the downside. It might break to the downside and then go up. And that's why for this diamond pattern here, I have my measured move going both to the upside and to the downside. So the measured move here, we draw it from our bottom right here to our top. This is the dotted line, and we clone that and bring it to the point of breakout, which I'm just speculating is going to be closer to this right side here. And so if we do break out here, I can see the technical target being about 3.2. If we break to the downside, I can see the technical target being about 2.6. One thing that you might consider is that our RSI has been remaining above 50, and typically this would represent some fairly healthy consolidation. This might be a flag pattern going on right here. We might move up higher after this if we do break this blue line right here. This blue line is only validated if we come down and touch this black line. But if this is the true bottom right here, and we flag out, we could see 3.15 pretty easily, just given the measured move here. So it's a very ugly flag right here, but this would be the measured move from the bottom right here to the top, flag, and we take this, clone it, bring it to the bottom over here, and that would bring us up to about 3.13, which would be a higher high, and that might be the start of a new trend to the upside. Let's go to a different time frame here and look at what we've got. So in between here, I've got a couple of lines. I've got a hard resistance line, a hard support line down here, and then a couple weak support and resistance lines here. So price is trading in between this middle range right here. We got supported at our weak support line. I drew this line here because we bounced off of it once, twice, 3, 4, broke down, support, 5, 6, resistance, and then we're supported here again. So it's a valid support and resistance line. But the full move measures from these red lines right here. We can see that we had a hidden bullish divergence here with our CCI coming down to a low and then setting a lower low, while price makes a low, and then it looks like we came down here to a higher low. It appears as though there almost might be a divergence going on here as we make higher lows here while price makes lower lows. Anyways, that'll be to play out. Talking about fractals like we did in the higher time frames, this is a very interesting fractal just because of how close it measures up with what had happened. This is our last big run up right here. I just took the bar pattern, and if we bring it over here to the current thing that we're seeing, we saw that we had this big spike, big drop, big spike, big drop, and basically, usually you can see a fractal and say that, yeah, it looks similar, but when they line up as close in time, that's very interesting to me. You see that both these highs are at the exact same time. We did make this similar move up. We did see this drop, and we're seeing the first difference in charting here with this moving up and us moving downwards. So I'm going to go ahead and delete that. I just thought it was interesting. Let's go to the 30-minute chart where I have a much better flag drawn out here. And I said we have a bullish 1 hour just because of that fractal trading. That was a while ago. But we saw this pretty easy to point out flag pattern take place. This is a middle pattern, and I have it marked in blue, and dotted lines are technical target. This is kind of a prelude to the example that I'm giving over here for natural gas on the right-hand side. But we have our flag right here. It's kind of a rough flag just because, what are you supposed to do with all these points right here? But price comes down. We draw our dotted line here from the high to the low, flag, clone it, drag it over here from the high down to the low, and this was our measured move to the downside. If you were playing DGAS, that was a very nice trade. And over here on the right-hand side, here on the right side, I've drawn out a potential Elliott wave pattern. We've got our low, we come up, set our 1, 2, 3, 4, and then a potential 5 up here meeting our hard resistance. This is a flag pattern that I see right here. There's no clear breakout right now, and so I'm just going to extend these lines over to the next closest support, longer term support line, drawn from the bottom over here, kind of through this low, and touching the bottom of this low, and also touching the bottom of this spike downwards right here across. So if this is a legitimate flag pattern, the measured move would be from this low right here, drag it all the way up to the top, and then bring it over here, take it to the wick down to the low down here, and it comes up fairly close here to our hard resistance line. So that is if this is a legitimate flag pattern, and that would be very bullish in a longer term picture for natural gas, simply because it would mean that we broke out above this blue line right here, which is the beginning of, or the ladder, which is nearing the end of this diamond bottom pattern here. Some of the reasons that I'm speculating that this is a flag pattern is that our indicators don't agree at all with this move downwards. We see our CCI moving upwards, we see our slow stochastic moving upwards, and we see our RSI moving upwards while price action moves downwards. So there are 3 clear bold divergences here on the 30-minute chart. So as for predictions going into next week, I could see us breaking out to the upside. And for the bearish case, I can see us moving downwards and then kind of flagging out on a shorter time frame and then coming here to our hard support. Again, we are reaching the apex over here, and it's becoming very hard to predict with any accuracy the movement or the direction, I guess. But here are 2 predictions from me going into next week's trading. Last but not least, let's check out the track record and how I did in natural gas on my last prediction. So this is my last prediction here on July 4th. It said the previous low was either the ultimate bottom or we're coming in on a higher low. Or I can also see us traveling all the way down to the previous low to form a bit of a double bottom. However, I find the higher low speculation a bit more justified. So this was the ultimate low over here. And I had my prediction lines. We can see our longer term support here. And it looks like we did come down, we did bounce up, we did bounce back down. And I don't know about this little move right here. Then we did have a move up, and we are flagging out to the sideways, and I predicted that we would move up higher, retest this breakout point, and then reach our upper resistance line slash hard support, or hard resistance. I had my buy target 1 right here, and buy target 2 down here. So that has been my analysis on natural gas this week, and hopefully it gives you a little bit of an idea of what to expect going into next week. I think that we are going to either hit hard resistance or hard support. I don't have a definite answer for you, but the goal is not to be correct. It is to be prepared in all of these videos, and I appreciate you guys for taking the time out of your day to watch these videos. Wish you the best of luck next week. If you got anything out of these, please like and subscribe to my channel. It really helps me out a lot and justifies me spending all this time doing all the background technical analysis, filming, editing, and uploading it to YouTube here so you guys can watch it. Anyways, thanks so much. You guys are awesome. Best of luck next week. Take care.